Yeah.
Would you hand over to you?
Yeah. Hello, everyone. Welcome to this session. Hi, Niyi. Just
And
thank you for coming to speak to us today. Yeah. Going to for everyone's. I don't know what to say. I don't do this normally, so please pardon me. I'm going to give a profile of me just so everyone has a background knowledge of him and his background as well. So after his first degree in economics from the University of Ibadan, Niyi began his career in the financial services, working with banks in Nigeria, including Access Bank and Guarantee Trust Bank, before relocating to the United Kingdom for his MSc in International Finance at the University of Glasgow. He continued his banking career in the UK and joined global brands such as Barclays and NatWest Group, holding key roles in project and risk management, policy development, planning, compliance, audit, and controls. In February 2018, upon completion of a 3-year contract with NatWest Group, where he had oversight of risk and controls in infrastructure technology projects, Niyi moved out of the corporate world to start up a new business with his wife, launching a new career as a property investor and starting Shafir Properties. Sorry, did I pronounce that correctly?
Shepherd Properties.
Shefa Properties. Yeah, a company that specializes in transforming old properties into high quality homes where beautiful memories can be created. Within 3 years of operations, the company has taken on 20 property projects, including flip sourcing, assisted sales, and built up a portfolio of BTL, that's buy to let. Through its approach to property investing, the company is creating values, providing high quality accommodations for young families and professionals, and making a social impact in contributing to tackling the housing shortage in the UK and one family at a time. Yeah, Niyi is happily married and lives in the beautiful city of Edinburgh with his wife and children. He is a consummate musician, composer, and enjoys writing and contributing to political and socioeconomic matters. Yep, that's it. So as we go along, please, if you have any question, just pop it into the chat. Niyi, I'll let you to tell us about yourself, how you started this, as in, I know I've read out your profile, but it'll be good to hear it from you as well.
Yeah, thanks for that, Mochi, and thanks again, Anna, for having me tonight. Yeah, what you read about my profile, that's a brief summary of of my career journey, really. 2018 is when I went full-time into property investment. Prior to that, my wife and I had been looking at, okay, my wife was contracting and I was contracting as well. So we had a bit of decent income. And one of the things we wanted to look at was how can we create passive income and become financially free, really, so that we can go on to do some of the things we enjoy without having to exchange our time for money. We considered different options: shares, investing in a friend's car business. And then we got into property investment. 2017, we bought our first rental property. And from subsequently in 2018, we just stumbled on a property investment course, which we went on and was really mind-opening. So at that point in time, I was coming to the end of my contract with NatWest Group, and decided to make the jump full-time into property investment. We started Shepherd Properties the same year, and we've done about 20 projects now, which include some of the things you read out earlier, Moji. So yeah, that's a brief summary from myself.
Wow, that's really great. That's good. So for us, for our community, we're a mixed community. We have those that are just coming into the United Kingdom, and those that have been here for a while, and people that are into properties themselves. And one way or the other, it might not be as a career, but they're trying to do something. So I'm just going to have a mix of questions, but I'll probably start with those that are just coming into the United Kingdom. How can they get onto the property ladder? Okay, I've been here. I want to. Some at come they have a job already, so settling down into the country, and I don't want to live in a rented apartment for too long. For me, normally, the way I think is, why will I be paying for someone's mortgage? Because you're definitely paying higher than they're paying as a mortgage monthly payment. So why can't I just try and put that money together and buy my own? And I know that my rent is like I'm paying my mortgage. So how can people that are just coming in, how can they get onto the property ladder?
Yeah, no, that's a really great aspiration for anyone to make, especially here in the UK, because apart from what you just referred to there in terms of rent being higher than mortgages anyway, the rent you pay is dead money. If you live in a rented accommodation for 5 years, paying £500 a month, at the end of the 5 years, when you move out, all of that money is gone. All you would have benefited from that was the enjoyment of living in that property. However, if you wanted to buy your own home, within 5 years, due to capital appreciation, you could actually have a tangible degree of equity. So it's definitely a worthwhile aspiration. For those that are just coming into the UK, getting onto the property ladder, there are just a few things I'll suggest, for people to pay attention to. Number one, having a bank account. Number two, creating looking at your credit report. For those who don't know about these, basically have credit reference agencies who kind of track all your financial as well as personal transactions. They have a map of your footprint within the UK. So when you open a bank account, when you register, when you're moving into a new accommodation, in terms of the electoral roll. So, but the key thing, the reason why it's called a credit report, and the reason why that's important is when it comes to obtaining a mortgage to secure a property, that's one of the key checks that banks will normally do. They'll look into your credit report to see, number one, to just check your identity, and also look at your credit history. How good are you in terms of managing credit, in terms of repaying debt? So, yeah, ensuring your credit report is in a good condition, ensuring that the information there is accurate is important. And yeah, next steps will be just if you have a bank account, most banks usually have a mortgage advisor, so you can arrange an appointment with your bank, and they will give you, because different banks have different requirements for providing mortgage. So if you go and speak with your the mortgage advisor within the bank where you have your account, or with the mortgage broker, then they can provide you with the specific requirements. But on a general basis, for a residential mortgage, you'll need about 5% or 10% of the value of the property for you to be able to secure a mortgage with the bank.
And for someone that is new, maybe someone in the UK for 6 months, and they're aspiring that, okay, maybe by the time I'm 1 year in this country, I want to be able to like put money together and buy my own first property. What are the things would you say that they need to put together? What do they need to be looking out for?
Yeah, so as mentioned earlier, their credit report, they need to ensure the information in there is as accurate as possible. If anyone, and there are a number of credit reference agencies that offer a free trial, a 30-day free trial. So you can register with either Equifax or yeah, there are a couple of other ones that their names escape me, but yeah, the
Experian.
Experian, thank you. Yeah, so Equifax, Experian, and then there are other ones that can register with. And yeah, in terms of deposit, it's important. Part of what the banks will want to see as well is 3 months pay slip if you're employed, or either your tax returns if you're self-employed. So those are the other documents that people need to put together. In terms of savings, if you're, the equity that you're going to be contributing, the bank will like to see that has been in the account, either in your savings for at least 3 months. So part of what you'll need to provide will be your 3-month bank statement. So 3 months bank statements, ID card, so either your driver's license, or if you have a British passport or Nigerian passport, if you're still new in the country. So bank statements, ID, your credit report, and your deposit.
Yeah, I know most times equity, or is it deposits, is always an issue. People raising their deposits. How can you advise people going about to raise the deposits, as in putting that deposit together? Is there any other way people can raise deposit? Can they get their deposits as a gift? And then another question before I forget, I'd like to ask final is, what would you advise or suggest? Will you be buying a residential property first, or buy a buy-to-let?
Well, in terms of the first question, yes, people can gift you a deposit, but banks usually want that to come from a close relative. So either your dad or mom, your parents, or your members of your immediate family. So that's if the deposit is coming from there, then that's fine. And they will need to provide a letter stating that that deposit is a gift and that they do not expect a repayment of that gift, really. So that's the thing. Apart from that, it would have to just come from a savings, or if you run a business, you can show it's come from a profit or sale of an asset or anything like that. And the reason why banks usually want people to contribute the equity, because they want you, quote unquote, to have skin in the game, just so that you bear a bit of the risk on the property as well. And your second question, would you?
Yeah, my second question was, would you prefer, sorry, not would you prefer, what would you advise? Yeah, would it be
BTL or
residential, or yeah, buy-to-let first?
Yeah, well, I guess it depends on people's circumstances, to be honest. But one thing I would say is some lenders, part of their requirements is before they can provide you with a BTL mortgage, they would expect you to be a homeowner. So not all banks, but yeah, some banks, is one of their key requirements that they would only give you a BTL mortgage if you already have a residential mortgage in place. So that's the thing. That's one. Then secondly, a BTL mortgage, banks would only advance a maximum of 75% loan to value. Some do 80%, but typically on average, they would only give you 75% loan to value. So just as an example, if you're looking to buy a property, say 1-bed, 2-bed flat, the town that cost £100,000 and you are looking to use that as a BTL, the bank would only give you a mortgage of £75,000 and you will need to go and find the remaining 25,000. But well, and if you compare that with the residential mortgage, the bank might be willing to advance up to 90% or even 95% in some cases, such that all you would need to look for will just be £5,000 to buy the property. So those are just some of the considerations.
Okay, and as for first property, first mortgage, what would you advise an individual to go for, a house or a flat, and why?
Again, it depends. It depends on how much the individual has. You know, someone who has a savings of £20,000 will probably be able to get, you know, a house or a bigger flat than someone who has just £10,000. That's one. Then secondly, depending on, it really depends on people's circumstances, you know, because if someone who's married or someone who's single, their focus and their property aspirations will be different. So that it depends on people's circumstances. The one thing I would say apply regardless is to buy in a decent area. And that's just to ensure that when you make the purchase, the property can, over time, the property value can appreciate. So that's what you want to do. And I have friends who, you know, they bought properties in an area. A specific example, a friend bought a 3-bed house in an area maybe about 4 years ago for just 230,000. But today, similar properties within the area are selling for 270, 280,000. You know, so and that's because he bought in a growth area, in an area that's expanding. So it's important when people are looking to buy, that you buy in a decent enough area to ensure that over time, the value of the property will continue to appreciate.
Sorry, Moji, can I begin to take questions? I have questions in the chat.
Yeah, I can see them, but I can see those questions. I don't want to go because those are in depth. I'm taking it from, yeah.
Okay,
so,
cool.
I was just thinking when I asked that question, as in, what would you advise if it were a flat or her house? I was thinking from the angle of freehold to lease. So can I ask first, can you help us differentiate between a freehold and a lease? And what would you think is better to go for, a freehold property or a lease property?
Yeah, no, that's a great thing to call out, Moji. So I'm based up in Scotland, and in Scotland, all properties are, except commercial properties, in Scotland, all properties are freehold. So we usually don't have that distinction between freehold and leasehold.
Including your flats as well. Your flats are freehold.
Yeah, they're freehold.
Oh, really? Oh, okay.
Yeah. It's only in very exceptional circumstances that you have leaseholders here up in Scotland. But yeah, in England, I know flats are usually leaseholds. And in that context, I would advise it's better to buy a property that is freehold. And what that just simply means is that you have full control over the property in terms of what you choose to do. So take, for example, if you want to make an extension or something like that. For leaseholders have restrictions on their property because there's someone, basically, I think the way leaseholds are created is someone builds, say, a block of flats, say, as an example, builds a block of flats, 8 units, and then creates a leasehold. And that leasehold could be, I think, anywhere between 100 to 999 years. And what that just simply means is that, and if they sell those units to people and people buy the leasehold, it means the buyers will only own the property for the life of the lease. So if, let's say, again, as an example, a lease is 100 years, it means the leaseholder, once, the lease is about to expire, then they will need to hand the property back to the freeholder who created the units in the first place. So that's what I understand about lease. As I said, we don't do leaseholds up here in Scotland, so, but that's the bit I know about it.
So I'll do for flats. Can I just ask, as I'm just curious, for flats, if I'm buying a flat in Scotland and it's not, or it's a freehold, who owns the land if I'm living upstairs?
Who owns the land? Yeah, so that will be communally owned. That will be shared between all the unit holders, all the occupants. Yeah, well, the owners of the flats.
Yeah.
So the communal. Yeah.
No, okay. In England, yeah, once it's usually leasehold. Yeah. And another thing that I would like to find out, what would you advise people to go on shared equity? So if I'm just coming into the country, I can't raise the capital by myself because I don't have anyone to help me. Would you advise I go on shared equity, or I should raise my capital to buy by myself?
Yeah, the first preference will be to raise the capital by yourself. And again, this just has to do with control. It's always better if the property is only, the ownership of the property is only shared between yourself and the bank. But of course, not everyone can immediately, especially if you're just new in the country, not everyone can immediately raise the capital required to buy the home of their dreams. So the government has provided different schemes, whether it's first home buyers or what's called LIFT as well. So the LIFT scheme. So government has provided different schemes whereby they contribute anywhere between 10 to 20% of the value of the property. They give that as a loan to the buyer, and all the buyer would need to do is provide 5%, and then the bank funds the rest. But what happens in that instance is, when the time comes, let's say the owner wants to sell the property, then it means they only get a share of whatever equity it is that they put in there. So yeah, the advice will be, if you're able to raise the equity by yourself, then it's better to do that. But if not, then yeah, you can go on one of the schemes, but try as much as possible to pay off that scheme as quickly as you can. That will be my advice.
Yeah. So can you tell us what, I know I should have asked this earlier, definition of shared equity. What is shared equity? Then shared ownership, and which one is better off within shared ownership and shared equity?
Shared equity and shared ownership. Well, I think having a mortgage, I'm not a mortgage broker, so I'm no expert in some of the schemes that are available. But yeah, in terms of shared equity and shared ownership, I think they mean one and the same thing as far as I understand. But speaking to a mortgage broker, I think will be a good thing on that point, because the mortgage brokers, they have a full knowledge of the different range of products that are and the support that's available out there to first-time buyers and even home movers.
Oh, okay. Can you tell us the process of buying a house? And I know you live in Scotland, so you only know about Scotland. So yeah, in different areas in Scotland. So there's someone asking a question. The buying process is different in Scotland. You are locked in. Oh, okay. I think it's more of a comment. Yeah. So I can ask a process. So for someone that is new, if they want to buy a house, what's this process?
Yeah, the process of what that I would suggest would be, of course, to ensure they have their deposit in place, and then speak to either a mortgage broker or speak to their bank, who will refer them to a mortgage advisor within the bank. And they will talk them through, okay, the amount of mortgage that the bank might be willing to provide for them based on their income, their affordability, and the value of the property that they're looking to purchase. So once the bank goes through that process with them, then the bank will issue something called, and if they pass all the requirements, the bank will issue what's called a mortgage in principle. And that just simply means the bank will be willing to lend up to a certain amount within 3 months when the purchaser finds a property that they would like to purchase. So once they have a mortgage in principle, that's almost a license to now go and search for the property of your choice. And there are different ways to do that. You can go, there are portals where properties are listed for sale. So things like Rightmove and Zoopla and On the Market. I can provide links to these after the call if you want. And yep, you can go on to search for the property that you once you find that, you'll need a solicitor who can help you to put in an offer to the seller's solicitor. So if that's agreed, if the offer is accepted, then the next steps will be the solicitors will do the searches on the title, and then they would work on the legal side of things. And they will interact with the bank, and the bank will then be able to provide, once all the legal paperwork is done, the bank will be in a position to provide the mortgage, as well as, and then you will contribute your own equity, and you'll be able to complete the purchase at that point.
Okay, I think there's a little difference between Scotland and England. Our mortgage in principle or mortgage offer from a bank is usually 6 months. So they give you 6 months, you have up to 6 months here for the validity of the offer, what they're offering in terms of the terms and conditions for the mortgage. Yeah.
Okay.
I'm going to start taking questions from what people have sent in. I think the first one I have here is from Adebayo. He said, have you invested in commercial properties? If yes, can you advise the planning process to convert commercial to residential?
We haven't done any commercial yet, but yes, we have. It's something we've been researching and actually put in offers for at least 3 that fell through. But in terms of the conversion, what you need is to get an architect. So an architect will help to look at the viability of the conversion, because there are certain requirements that the council will require for you to meet in order for the conversion to take place. So you need an architect, and you'll need to apply for a planning permission as well as a building warrant to the council, and the architects can help with all of that. So that will be the process. The architect will come in, they'll look at the existing layout, and then they can discuss the proposed layout and how many units you can get out of the commercial property, how many residential units you can get out of the commercial property. The good thing about some of the advantages of doing a conversion is that for commercial property, any property that's valued less than £150,000, you don't need to pay stamp duty. But if you were a residential property, that kicks in at £40,000. So any property above £40,000, you pay stamp duty on it. So, and typically commercial properties, well, depending on the size, they are not as expensive as a typical residential property.
Okay, yeah, thank you for that. Another question says that is it considered BTL if you live there and rent rooms out?
No, it's not considered BTL, but it's still considered as a residential mortgage. But the people living there will just be regarded as lodgers. So everyone who has a residential mortgage by law is entitled to have up to 2 or 3 lodgers in their home. So sometimes what people do, especially those buying for the first time, is, and if they're young, they don't have a family, what people do sometimes is they buy a 2-bed or 3-bed flat, they live in one room and then rent out a room or 2 to their mates who pay them the rent. So it's a good way of almost combining both residential and BTL together, because you'll be living in the house, in the property for free, because you've rented out the rooms, and whatever rent they're paying you, you can use that to pay your mortgage. So yeah, it's a good way to go about the first purchase. There are obviously inconveniences to that in terms of you don't have the property to yourself, and then just living in the same space with other people.
Well, is that not similar to HMO?
It's slightly different because in HMO, you are not living in it. So an HMO, but even if you're a living landlord, depending on the numbers, still regarded as your tenants will still be regarded as, the people living there will still be regarded as lodgers. And for HMO, the threshold, well, depending on, in Scotland, the threshold is 3 people. So if you have 3 or more unrelated people living in the same property and they share bathroom and the kitchen, then that's considered an HMO. In England, I think that the threshold is 5. So if you have a flat and you have 2 people and you live in there and 2 other people are living with you, then it wouldn't be an HMO, it would just be you having lodgers in your property.
So just for the benefit of other people, can you tell us what HMO is all about? Because I know people will be wondering, what's HMO again?
Yeah, well, HMO is just an acronym for houses of multiple occupation. And this is a situation where you have, so again, there's a distinction between England and Scotland. It's basically different people, 3 or more unrelated people living together in the same property and sharing conveniences like bathroom and kitchen. So there, in order to operate, the reason why people do that is because, especially if you are doing a rental, I can use an example. If you have a 3-bed flat that you rent out to a family, let's assume you're collecting £600 a month in rent from the property. If you were to convert the same property into an HMO, whereby rather than renting it to one family, you rent out each room to individuals. And if you rented out a room at £250, you know, if you have 3 people in there, that's £750 that you'll be getting in rent, compared to £600 if you rented it to, if you let it out to just one family. So that's one of the reasons why people go into HMOs, because it creates a greater level of cash flow than single lets. But there are downsides to it as well, because obviously when you have 3 people, in terms of wear and tear, and also in terms of the bills, because if you're running an HMO, you'll be responsible for the bills. And by that, I mean the electricity bills, the council tax, and providing Wi-Fi. But for a single let, whereby you let to a family, you wouldn't be responsible for any of that, and you'll still be able to receive the rent in full.
Yeah, thank you, sir. I just have, I was just thinking now, a question similar to the one you answered before now, in regards to, so people being able to rent 2 rooms out and that not qualified as HMO. And the question is, would they need to pay tax? And how is that different from Airbnb? Because there are people that have their own, they buy flats or they buy houses and they want to let one of the room in their house or in their flat as Airbnb. And I know for Airbnb, you need to declare it, you need to pay your taxes on that. So those people that do it private, as in, so if I decide to let out a room in my house or 2 rooms, do I need to pay tax on that as well? What's the tax implications?
I think for lodging, you don't have to, and I'm no tax specialist, I need to make that disclaimer. I think for if you have lodgers in your home, you don't need to pay taxes. And the difference between lodging and Airbnb is that Airbnb typically is just it's a short-term thing, so maybe a couple of nights or a couple of weeks maximum. I think 240 days per year is the max. But as a lodger can live in your home for, well, as long as you both agree for them to be in there. So the contracts of residency is different between a lodger and having using your room as Airbnb. And yes, there will be tax implications because the one for Airbnb would be regarded as a business income.
Oh, but even those that have lodgers, is that not an income as well, because they're making money off it?
Yeah. I think it's because the lodgers, you are allowed by law to have lodgers, and because it's more long-term in nature, as opposed to a business accommodation, which Airbnb could be.
Oh, okay.
Yeah. With regard to the tax implications, I'm not fully conversant with that. It'll be a good thing to speak to the tax advisors, tax specialist. But what I do know is that for lodgers, by law, you're allowed to have lodgers in your home, and I'm not sure if the tax implications are the same for lodgers and Airbnb. But I do know that there's a difference in terms of how the arrangement is viewed.
Yeah, about that as well. I think there's a particular threshold you need to get in England. I don't know about the old United Kingdom, that you now need to start paying tax, even for BLT as well. Buy to let, BTL, sorry. There's a particular threshold that before you can start paying tax. If you don't get to a certain threshold, you don't need to pay tax on them.
Yeah, so well, I guess it's £12,000. So you have your tax allowance
yes,
of £12,000. So if the income you don't pay any tax on the first £12,000 of your income on any given year. So if the income you're making from your employment as well as income from your BTL is just slightly over 12,000, then you're going to pay just a minimum amount of tax. But whatever it is, the first 12,000 is tax free. So if you're making, you can just for argument's sake, you're making £12,000 a month on your employment, I'm making £6,000 on your rental income, rather than the whole 16,000 being liable for tax. All you'll be paying tax on will be about £4,000, which is above the £12,000 threshold.
Okay, depending on what kind of employment the person is. I think the other, if they're in paid employment, the other one, they can just declare it as self-assess under their self-assessments.
Yeah, correct. Well, whether you're in full-time employment or self-employed, everyone is entitled to the tax allowance of £12,000 in any given year.
Yeah. The next question we have on the board is, I'm based in Germany here. so the person I said, yeah, that they're based in Germany here. And one of the requirements from my bank is that I have a PR. I don't know what PR means, but the person, is this a general requirement or just peculiar to my bank, or just peculiar to applicable in Germany?
I guess the PR means permanent residency.
Oh, okay.
Ah, okay. To be honest, it's been a while since I applied for a residential mortgage, so I'm not too familiar with the current process, but I do know that when we purchased our first home in 2011, we didn't have permanent residence in the UK, and were able to secure the mortgage. We were on a working visa. My wife and I were on a work visa, and we were able to secure the mortgage. No problem, even though we didn't have permanent residence. Again, I don't know if that has changed since, because this was back in 2011. But yeah, as long as you are, you have the correct visa, and you have, they are satisfied about your employment status and your level of income in terms of affordability, there are banks that will be open to lending, to providing you with a mortgage, even if you do not have a permanent residence.
Yes, I think the only thing is just if those with no permanent residence or indefinitely to remain would be the, can I call it expiry date of their visa, or the validity on the visa. So if it's closed, they might not want, just in case the person does not get a renewal, they might prefer that person renews first.
Well, I don't think they tie, because mortgages here are typically 25 years for 25 years. So they don't typically tie it to your, the expiry date of your visa, as far as I'm aware. Again, I said, I'm not too familiar with the current process, but
yeah, recent times we now do.
Oh, really? Okay.
Yeah, recent times, yes. I don't know why. Yeah, before it didn't used to be that. So I bought my first property as well. I think I had just 2 months left on my visa when I bought my first property. But right now, I think they now do, because I've had friends, I've known people that had the limitations, and they've told them they had to wait to renew before they could give them a mortgage offer.
Yeah, well, I guess if you have just 2 months left, then yes, it's definitely something that they'll call out, because the 2 months might even be the amount of time you'll need to process the mortgage in the first place. So they might not be really open to that. But what I'll say is that that shouldn't deter anybody from approaching their banks. And that's very important, because different banks have different requirements. So it's important to go in to speak with your bank, or better still, to speak to a broker. So for those who don't know, brokers, mortgage brokers, basically, they speak to different banks and they have an idea, they have a knowledge of the different products that are available, that are provided by different banks, the different mortgage products that different banks provide. So they can take your circumstances into consideration, and they will be able to advise on which lenders they think would be amenable to providing you with a mortgage. And some of them, they deal with 90 banks, or some are even whole of market, which means they have interface with most, if not all, of the mortgage providers in the UK, going from high street banks, like Barclays and NatWest and Santander, to more specialist banks like Aldermore and Solutions and Leeds Building Society and all of those, Paragon and all of the other specialist lenders.
Yeah. Our next question. So this is like, I'm just going to ask you. So are you open to offer coaching or mentoring for someone that is upscaling their property portfolio?
Yes, I'm open to helping people. I guess for me, one of my passion, and that's part of the reason why I'm here this evening, one of my passion is to help as many people as I can, who have the aspirations of either owning their own home or building a property portfolio for themselves. So I'm happy to provide, to share a bit of my knowledge and experience that I've gained with people, from time to time. So no problem about that.
Okay, so that means we'll need to drop your contacts so that you can be reached.
Yep,
certainly. Yeah. The next question is, someone is saying, say I have £1,000, can I get started investing in real estate? If yes, can you give a practical walkthrough of this on £1,000?
Well, for £1,000, what I can say is that £1,000, it's unlikely £1,000 will be able to buy a property or even secure a mortgage in the first place. So that's one. However, I like to put it that there are direct as well as indirect ways of investing in property. Direct property investment is whereby you source the property yourself, you negotiate the deal, you find the funding, do it up, rent it, and then you set it up as a proper BTL or flip the property, as the case may be. But you'll have to find the capital and then secure the mortgage, et cetera, et cetera. The indirect way is lending to where and this applies, maybe you either because you do not have sufficient capital to put down the 25% deposit, or you don't even have the time to go out to source the property and do all the refurbishment works and all. So you can, if you have money sitting in the bank, you can lend it to a property investment company, and they can provide a fixed return on the money, say for about 12 months. We do this as a company, we do this, but because of the value of projects we do, we typically set the minimum at £10,000 because we provide written contracts stating the terms and conditions of the property. So and the reason is just to really minimize our own overheads, because if we're looking to buy a property of £100,000, if we're obtaining loans of, say, for example, £2,000, that means we're going to have to write out about 50 contracts. So just from an operational perspective, it's not severe. So that's part of where we kind of pegged our minimum lending to £10,000. But yes, you might have other companies that you can you can lend £1,000 to, or it could be that maybe if 10 people have £1,000 each, then they could just pull the money together and lend it to a property investment company.
Sorry, can I quickly ask a question? The
Sure.
£10,000 you guys work with for your own kind of portfolio, what is the return rate per annum?
That was going to be my next question, because I know people were going to be interested.
Yeah, well, I mean, I can send you a rate sheet, but £10,000, yeah, we offer 5% on that. And if you're in the UK, you have a bank account in the UK, the £10,000, what they're going to get, what the rates the banks are paying today is 0.01%, which means even if you leave £50,000 in your account, at the end of 12 months, all that the return you're going to get on that money is £5. And that's not taking into account inflation or taxes. So £50,000 in your account, 12 months, you get £5. But on £50,000, we would typically pay 7%, which is £3,500. Same amount of money, same period of time. And basically, the way we run the model is, let's say we take the £50,000, then we go and source a deal. We make the purchase, we do up the property, because the model we operate is we buy, as I said previously, we buy distressed properties that are run down, derelict, but in good areas. So we buy them, do them up, and then refinance them. So we take the funding, the private lending, we use that for the purchase and the refurbishment. And once that's completed, we rent out the property, and then we refinance the loan with the bank. And the way that works, I'll give a typical example of the deals we do. We bought a property for £65,000, spent £11,000 on the property, because the property was in a rundown state. Spent £11,000, £12,000 on the property, and same property, when after we finished the work, was revalued at £106,000. So typically what we'll do is, once we completed the works, then we refinance it at £106,000, pull out the equity, and then we use that to repay the private lenders, both their capital and interest. And we have people who lent us various sums, from 10,000, or have those who lent us £50,000. And what we found is, because of the amount of interest people are enjoying, at the end of the term, they usually just want to take their interest and ask us to roll over the capital, because they know, said, they can't get anything near that from their banks.
Yeah, and can I ask what's the terms? Because I'm sure people would want to know. If not, I know the next question.
What's the terms? Well,
is it 3 months or 6 or 9 months, a year?
Yeah,
what interest? Do you pay interest monthly? All those kind of things. Yeah.
Sure. Well, broadly, a loan agreement is usually 12 months, and that's just to give us sufficient time for us to be able to turn the money around. Yeah, so it's typically 12 months, and we pay the interest back end. So ideally, we work with those who are either it's the money is coming from their savings, or it's maybe coming from an inheritance or the sale of an asset, so that it's not money that they need access to. So we typically do a minimum term of 12 months and pay the interest at the end of the term. But it's we provide loan agreements specifying all of those terms, and yeah, the private lenders sign and we sign, and they have that for their records. And we keep all our lenders updated about the projects we're working on. And I know you would have seen a couple of my posts on social media, because that's apart from providing a biannual communication, we create posts on our social media pages just to keep our lenders informed of the project we're working on, and yeah, basically where their money is.
Yeah, thank you very much. I think we have clarity on that. It would be good to have your contact if and you can get that, and the plan sheet you mentioned about the 10 sheet, or I don't know, as
Okay,
in document, so that people who are interested can pick that up. Yeah.
Niyi, do you have your permission? There's on your signature when you sent me an email, your contact was there. Do I have your permission to copy that and share?
Yeah, sure, of course, please.
So the second question from the same person asked about the investments, 1,000 investments, is, can you give a walkthrough of investing in real estate for rental income? How does this work? How soon can one begin to get rents?
In terms of the process, the first thing, and if it's rental income, that the first thing will be to just really determine the demand, and you could do that by going to speak to lettings agents, because at the end of the day, whatever property investment you make, you want to be sure that there's going to be a demand for it, that there's someone who is going to want to rent that property and who will be willing and able to pay the amount of rent that you set. So the first thing will be to qualify the demand, find the area where you want to do your BTLs in, because not all areas work for BTL, for rental income. So it's to find those areas, try and ascertain the level of demand, and then try and determine the type of property that people are looking for. All of this information you can obtain from the local letting agents. Once you determine the area, you can just walk in to go and speak to the lettings agents within those areas, and they can provide all of that information. Or you could go to any of the portals as well, Rightmove, Zoopla, On the Market, etc., to just gauge the level of demand. And once that is sorted, then the next thing will be to find the property in that area. And of course, you'll need to ensure you'll have adequate funding, either if you're buying cash or you're going to be using a mortgage. So those are all the things that need to be bolted down as well. So qualify the demand and the area where you want to invest, find the property, find the funding for it, make the purchase, and then rent out the property to qualified tenants. And letting agents can help with all of that process in terms of carrying out checks on the potential tenants, actually marketing the property as well. for you.
Oh, sorry. Yeah, okay. Just while you're thinking, that's not the third question, but I'm just going to ask this question because I know you did mention letting agent. Which is better, letting by yourself as in managing your own BTL or putting it in the hands of letting agents?
It depends on how many properties you're looking at and how much time you have, really. So if you're just buying just one rental property, and if it's within the same area where you live, then yep, you might consider managing it by yourself. But what that means is you'll be having direct interaction with the tenants, and if anything breaks in the property or the tenant requires anything, they are going to ring you up. And also you would need to keep on top of the various legislations that the government imposes on rental accommodation. We typically use lettings agents because of we want to be able to just focus on our primary our priorities in terms of finding the deals and finding the funding and setting up the properties. Once we have that, then we just hand it over to the lettings agent so we can go on to find the next deal. And the advantage of that is, of course, we don't have to deal directly with the tenant. We don't have to be bogged down by any issues that may come, because all of that will be handled by the lettings agent. And also they will be able to keep on top of all the compliance requirements and legislation and ensure that they keep you right in terms of the rental property.
Okay, is that not expensive?
Well, it depends on the value.
What I mean expensive is as in how much you would, because you get to pay them as well.
Yes, you pay typically 10%, but
you cover all the expenses and you pay a certain percentage on the wherever you pay on repairs as well.
No, typically we just pay for the repairs if there are any. But because most of our properties are newly refurbished anyway, we tend not, especially in the first few years, we tend not to have any significant maintenance issues. But having a lettings agent just means, whilst yes, you have to pay the 10%, it means you don't have to it means you shield yourself from even having a call at 12 midnight about a burst pipe or a boiler that's broken down. The tenants will typically call the lettings agents in that instance. But like I said, it depends on the number of, a couple of things. The number of properties you wish to have, because if you have one or two, that might be manageable than if you had, say, a couple. That's one. And secondly, if the properties are within the area, maybe just a 10-mile radius of where you live, then that could also work, because it means if there are any issues, you can quickly drive down there to sort it out, you know. So, but if your rental property is about an hour and a half away from where you live, then if you need to do any maintenance work, it might require you to make that trip there.
Okay. Before I ask this person's third question, while you were just talking, another question just popped into my head. So, because I was just thinking, is it not better? I don't know what Scotland is like, but I would think it's the same thing. Just having some insurance in place to cover whatever. I know landlords are looking at maximizing profits, yes, because that's what it's all about, to get as much profit as possible. But at the same time, maximizing profit, you maximize profit more when you manage by yourself than when you give to agents to manage on your behalf, because they are out to also make money. But would it not be, no matter how many properties you have, is it not safer if you have insurances in place? Okay, I'll give you an instance. One of my property, the tenants burned down the old kitchen.
Oh, wow.
And yeah, the old kitchen got, I don't know how they could claim they didn't hear the smoke alarm in the sitting room, and the old kitchen got burned down. And because kind of insurance that I have, so I manage myself, and I have a premium insurance on all my properties. So everything was handled by the insurance company, and they even put them in a whatever accommodation, in an hotel, pending the time they were fixing the place. Yeah. So I was thinking, is that not kind of a cheaper way than putting in? Because I've approached agents and they'll tell me that even on expenses, if I'll pay the expense fees and I'll pay a percentage on top of the whatever fees for maintenance or whatever that they're fixing. Is that not better off?
Yeah, well, I guess up here in Scotland, typically the agents we use, if there are any maintenance issues, that they deal with it, and they send us an invoice for it. And sometimes, if the property is in an area where we have tradesmen or builders that we've used before, we actually even just reach out to them directly to deal with the issues. Managing oneself, yeah, I completely agree with you. It means you can keep more of the rent yourself. It just depends on what you don't pay in monetary terms. You sometimes have to pay with your time, if you get what I mean. Because if you have to do, for example, the annual compliance checks, if you have 10 properties, it means you need to go through all of that, arrange for gas safety checks, arrange for the pad test, etc., etc. And also, if you have bringing in a new tenant, you again need to go through all of the checks and all of the setup and the move-in process with the tenant. If the property is within your, again, within the area where you live and can easily get to, and that's fine. But if it's further afield, then that might just, you'll need to calculate the travel time as well as, yeah, the time away from any other thing, the opportunity cost of going to attend to that.
Oh, okay. So, yeah, this person's third question: how does buy and flip work in the UK?
Yeah, well, it works in the same way. Typically, like any asset would work. You buy at a low price, you add value to it, and you sell at a higher value. The way to do it is always to work back from a number. What would the value be? So take, for example, if you're looking to do a flip within an area and you're looking to buy a 2-bed flat, you need to look at, okay, how much did recent sales go for? So if they went for 200,000, this is an example, then the next thing will be to find a property that you can buy for a similar property, but maybe in a bad condition, that you can buy for 100 or 120,000 pounds, spend about 20,000 pounds or less on it, and then knowing that you'll be able to flip it for a similar price as the one that recently sold. So that's typically how it works. So you buy a distressed property, add value to it, and then sell it for a higher price than what you paid for it.
Oh, okay, sir. How can people source for those distressed properties?
Yeah, there are different ways. You can source online by going to the portals, Rightmove, Zoopla, on the market, and if you're in Scotland, ESBC. And you can also source for them by just talking to people, really. So if you've identified an area where you want to buy the property, yeah, you could even go and drop letters through their letterbox, just like to whom it may concern letter that are looking to buy a property in this area. If they want to sell or know anyone else who's looking to sell, they should give you a call. So that could be it. That's what's generally referred to as a direct to vendor, whereby you actually get to speak to the owner of the property as opposed to going through an estate agent or finding it online. Those are different ways. You find it on, can go online. Auction is also another place, but auction is a very dangerous place, so to speak, if you are new to property investment, because yeah, the auction terms means the principal thing to watch out for in auction is, but caveat emptor, just buyer beware. Like someone, the way someone defined an auction some time ago that I found interesting was, auction is a place where the gremlins come out. So it's just very important to do adequate due diligence if one is buying at auction, just so that you're actually buying what was advertised, as opposed to, some, yeah, so some.
What you read, yeah. Do they still allow viewing for auctions? Because I know a while back they used to allow viewing, so they give a time where you can go to the property and view. Is that still applicable for auction properties?
I think they would have resumed viewings now, as far as I'm aware. But yeah, during the lockdown, they weren't allowing any viewings. You could only probably just go to view the external of the area of the property. But I believe viewings would have resumed now, since the restrictions have been lifted.
Oh, okay, sir. So another question from the board says, please, does one always have to re-register on the electoral roll whenever you move house or change address? Don't know if it's part of this meeting though, but the question came onto my mind. Yeah, when you mentioned.
Yeah, it's a key part of this meeting, because like I said earlier, part of so if you want to obtain any loan, whether it's just a personal loan or a mortgage or a credit card or car finance, one of the things banks do is to carry out a credit check. And they go to credit reference agencies, which we mentioned earlier, Experian, Equifax, etc., just to verify your identity. And one of the things to do to verify your identity is that you actually live at the address where you have provided on your application. So it's almost a background check on you. So it's important that whenever you move address, because all of those things are recorded, whenever you move address, it's important to register on the electoral roll. The other thing I'll mention about that is, wherever possible, it's better to stay long-term in places, because if you have too many, if you're moving too often, that could affect your credit score. So credit report, credit rating, that's a whole subject on its own, but basically maybe all that's needed for this call is to know that the credit score ranges for Experian. The excellent score is 999, and you have fair, you have very good, fair, bad credit, and typically wherever you are on that spectrum will determine how much credit you can get, if any. So one of the things that contributes to that score is your registration on the electoral roll.
Oh, sorry, sir. I was talking on mute. I know you mentioned move. So for a contractor that maybe a single contractor that probably get 6 months, 1 year contract and being single and flexible and can move all over the country, what would you advise someone like that?
Well, I reckon there's really nothing much you can do if you have to move with work, other than making sure you still register when you move into the new address, so that you can show that audit trail, that track record of where you've been, where the different places where you've lived. And if the question comes up, you can always provide the information that this is the reason for the constant move, that is job related.
Okay, thank you, sir. The next question is for the first residential purchase with the LISA scheme, can the house be modified or amended to create maybe extra floor to rent out?
It will depend on the terms and conditions of the scheme. So that will be fully detailed about what you can or you can't do. But typically, lenders will want you to, even if you're not using any scheme, lenders, if you are making any structural alterations, so in this case, if you are looking to create an extra floor, lenders will typically want you to notify them before you go ahead with such plans. A quick example, we wanted to convert our own garage into like a granny annex, like a self-contained flat with its own bathroom and kitchen, and rent it out. But the lender wasn't amenable to that, and we had to notify them. So in some instances, yes, they might allow it, but in other circumstances, they might decline it. So, but yeah, you will probably need to, that will be contained in the terms and conditions of the scheme you're signed up to.
Oh, okay, thank you, sir. The next question is, granted you have your first property, what are the pros and cons of either letting out your property as an all bills inclusive or no bills inclusive? I don't know if you understand that question, sir.
Does this relate to if you have a rental property?
No, you just said, granted you have your first property. So you have your first property. What are the pros and cons of either letting out your property as all bills inclusive or no bills inclusive?
I'm not.
Let me try to explain that. So I bought a property, right? You know how you want to rent a place and they say it's £500 per month, inclusive of bills, right? And then it's asking, is that a better way to do it? To rent out a place with the bills included in the rental costs, or to rent it out without the bills inclusive, so that the tenants take care of the bills themselves?
Yeah, well, it would be, I guess it'd be good to make a comparison of the two, is what I'll say, to know what the bills will be if you were paying all of the bills and how much rent you'll be getting, to ensure that it's going to cover all of the bills and also still have enough for generate enough cash flow for you. We typically go no bills inclusive, because then that way it means the tenants can deal with all of that by themselves, and it's not additional cost that we have to bear. So whether it's the utility bills or council tax, all of that. But if you were operating, say, an HMO or a multi-let in this instance, then yeah, one of the attractions would be to make it all bills inclusive, because from the perspective of the tenants, it means they don't have to worry about doing all of that. They can just pay all of the money, and they can just pay their rent, and they have access to Wi-Fi and electricity and power and all of that. So it will just be, yeah, you can make that determination by comparing what the cash flow would be if you were to let it out, either under all bills or no bills inclusive, and also consider what impact that would have on potential tenants.
Oh, okay, thank you, sir. Next question is, how safe is it to buy BTL in a location far from where you live if you plan to use a property manager? So is it, when I say far, like example, Manchester to London far?
Yeah, it's perfectly fine, as long as you have a trusted agent who has your interest at heart, and yeah, they have a reputation to protect. So that's absolutely fine. A number of our properties are about 1.5 hours drive away from where we live. And in fact, we've done a project based in Edinburgh. We've done a project in Newcastle, for which is about 2 hours drive, but about 1.5 hours on a train. And it was all just about finding the right agent to help with the management. So that shouldn't be a problem at all.
Yeah, thank you very much, sir, for your time. So what would you give as a general advice for someone coming on to thinking of going into property as a career? So if I said I want to drop my day job now and go into property full time, what are the things what would you say that I should look out for? And would you advise me to drop my day job or do it both, like kind of part-time, then get ahead before I get onto it?
Yeah, well, with what I do now, yeah, I would advise people to, number one, determine how the bills are going to be paid. Because if you drop your full-time job down, then you'll still have either rent or mortgage to pay. If you're married, have kids, you still have school fees and all that to pay. So depending on how much time you have, you can maybe just face the transition. You can start doing it on the side, and it's all about commitment. Because if you're doing a 9 to 5, if you're able to set aside 2 hours every night, Monday to Friday or Monday to Saturday, to do your research, to try and find the property, to go and do viewings, then you might be able to still do it side by side. Part of the reason why I went in full time, full steam, was a conversation my wife and I had, and the decision was for her to continue working whilst I go on to set up the business. So at least that way we still had a source of regular income coming in whilst we build up the income from the property business. And the plan is to replace all of the income from both my own former employment and her current employment from the property income. So when we reach that stage, she herself can exit the 9 to 5, and we can both be working full time in the property investment company. So the advice is for people to look at their own personal circumstances, and to consider the impact on their lifestyle, on their finances, before making that decision. And if they're able to, if wherever possible, yeah, they can, depending on how quickly they want to move. We really wanted to hit a financial target pretty quickly. So that's part of the reason why, yeah, we thought to jump in with both feet.
Yeah, thank you very much for that. Then another question for investors, which would you say they go for? Is it buying distressed building, renovating, or going into property development? That's in terms of buying land and build. Which is more lucrative?
Well, I guess I'll look at it from a different perspective rather than which is more lucrative. Point is, which is riskier, you know, especially if one is starting out. Buying land and building and either selling or renting. Now, there's a lot more complexities and cost, in fact, involved than buying a typical, well, an existing 1-bed or 2-bed flat or house. So my advice, especially for someone starting out, my advice would be to start small, and then over time, as you build your knowledge and experience, you can begin to gradually scale up. The important thing is getting the required knowledge and being able to do the due diligence required, because yeah, that just a lot. The process of new build, as buying land and building out, is a lot more complex than simply buying an existing property.
And how much would you say that they should start saving up as capital to kickstart that venture? Kind of capital, yeah.
Yeah, well, as I said, it's 25% of the value of whatever property they're looking to buy. So if you're looking to buy a property, that's if you're not able to buy cash, you'll need at least 25% of the value of the property you're looking to buy for investment. So if it's 100,000, you'll need a capital contribution of £25,000 in your account. And if it's 50,000, then yeah, you require 25% of that.
Okay. Thank you very much, sir, for your time. Thank you for the knowledge you shared with us today. I don't think we have any other questions on the board from anyone. So what advice would you just give us generally from what we've not asked that it's in that you have in mind, that you want knowledge you wanted to share with us?
Well, the advice I'll give is that property investment is, I said this at the beginning, is a great aspiration to have, and it's a great way of building wealth. Typically, especially here in the UK, because of capital appreciation and also because of the continued demand. So in the UK, there's a housing, and you might have seen this in the news, there's a housing shortage. The government can't provide enough houses for the number of people who are looking. Up in Scotland, I think the last report I read, there are probably about £132,000. I say 132,000 people on the waiting list for homes. So that could be those who are homeless, or those who are suffering domestic violence, or those who are maybe on benefits, and the government needs to provide for them. So there's a shortage of homes because the demand has constantly been outstripping supply. The population is increasing, there's immigration. So there's demand for good quality properties, and being able to generate an extra source of income without you trading your time for it is another real benefit of property investment. Because if you have, let's say you have a buy-to-let property, and after all fees, after all expenses have been paid, the mortgage, and if you're using an agent, after you pay them, if you're earning £200 a month that drops into your account, that's extra income that you don't have to go to work to earn. If you have 2 of such properties, that's £400 that's coming directly into your account that you don't have to trade your time for. If you have 10 of those properties, that's £2,000 passive income that is coming to you on a monthly basis, without you again having to put in any extra effort other than the effort you've made upfront to set up the property in the first place. So that's a huge benefit, and that's one part of it. The second part is capital appreciation. So typically, because of inflation and also because of law of demand and supply, property prices, and even historically, a 50-year trend that I've looked at in the UK, property prices have always trended upwards. And it's a great way, as I said, of really creating wealth. Someone who bought a property of £240,000, and within a couple of years, the same property is worth £300,000. That's £50,000 equity that's been generated. So, yeah, I'll encourage anyone who's interested in property investment to to go more forward with it. There are risks involved, so it's just important to have the right knowledge, do the required amount of due diligence, and also just ask advice from those who have done it or are doing it. Moji yourself, and I know people can always ask. You've got my details as well. So yeah, that's what that's the advice I'll leave you with. It's a great way of building wealth, and especially as ethnic minority, economic empowerment is one of the things we talk about, and I feel property investment is one of the great ways whereby we can use to level up as far as that area is concerned. So thanks a lot for having me, and thanks for listening.
Thank you very much, sir.
Yeah.
Niyi, I can't let you go yet. I have a final question.
Okay.
I'm very conscious of your time, so it's a very final question. You can just answer in 2 sentences. Of recent, I've been paying attention to how, just like you said, the government is really looking for property because there's a high demand for it. Are there opportunities for people who have the money or are saving towards it, who have the opportunities of buying properties that the government will rent from you for sure? Are there opportunities like that? And would you say is a better option than doing it privately?
Yeah, there's certainly opportunities like that. And up in Edinburgh where I live, there's actually a company that does that on behalf of the council. It's called Link Property, and you might have seen them. So they basically take out leases from private landlords. Could typically be 3 or 5 or 7 year leases, and they pay the rent to the landlords directly, and they use that to house, use it for social housing. The advantage of that is because it's a lease, it means you don't need a lettings agent to manage, you don't need to interface with the tenant, and you don't really need to worry about the property at all, because the the link property will look after everything. Sometimes if there's a major maintenance issue that needs to be addressed, they will get in touch with you. So yeah, that can be done, and it's just really very convenient. However, some banks, if you're using a mortgage, that's something you need to check with your that the lender will be comfortable with, because some lenders are not really comfortable with DSS or universal income tenants. So that is something to bear in mind. But yeah, there's certainly benefits in it. The other thing though is that they will not pay you they will not pay the same amounts that you can obtain in the market. So probably about 100 or 150 pounds less than what you would get if you were to rent out the same property privately.
So are the leases full repair insurance leases? Do you know?
The one I've seen, because when I looked into it, I think no, you will still need to be responsible for the repairs. What they could do is they'll carry out the works and then invoice you for it.
Thank you so much, Niyi. I really do appreciate your time. It's so funny that you live close to me, but I'm just hearing so many things now from you when I have you here. But thank you so much again. I appreciate your time for being here, for talking to us. And I will share your details again, just for everybody to see it. And then people will reach out to you as they either for investment purposes or for coaching purposes, as I said. So thank you so much again, Niyi. I appreciate your time. Thank you again, Muji, our guest that is shy, video shy. We appreciate yes, Adedayo, he said he coaches, so you can contact him directly if you want. Yeah. And thank you everybody for showing up. I appreciate you for showing up today. Have a good evening, everybody. And can we just come out of mute and just say, just let's pretend we're in a physical room and give me a wonderful round of applause for doing a great job tonight. Thank you so much.
Thank you.
Thank you so much.
Thank you.
Thank you.
Thank you. Good night, everybody.
Good night.
Hi, Saloma. Bye.
Hi, bye.
Good night.
Good night. I have his details here. Copy it before we go, please. Prof, we can stop recording now.